Hello, good morning, good morning. Welcome. Let's do it here. Music, all right, look good. All right, let's get cracking, guys. Price action is just waiting on distribution right here. So we are currently, how do we do this? Let's draw this range from here to here that price is currently holding. Waiting for a breakout. Yeah, so this is the range that we're currently in. Price is waiting for a breakout. This whole area is about, let's see, 94 pips. 94 pips, still a sideways movement right over here. So I'm going to be waiting to see if we can start to get a little bit of volume in. And then find a way to get stuck into a position. So right now it's just a waiting game. I believe we're just waiting for the New York session open. And I got a feeling here that price is going to actually break bullish, just because this could be a potential liquidity grab here once we started to break below this support. That support by 41.15. All right, 41.15, break below, fake back into the range. So here we got a, let's just call this a fake out right there, boys. So we got a fake out. Price back into the range, holding this general region right over here. Most likely going to start to see buys come above. You're going to have this area here. You're going to potentially see buys start coming above like 41.22. 41.22. If we do end up getting a sell continuation, then I would be anticipating the sell to actually play out below like 41.12. And if we're going to break below like 41.12, then there's going to be like a really good range. Again, for price to come down towards this support area right over here by like 40.92 area. So that's currently what I'm looking at. Now, the only missing thing is volume, right? Once you start getting the volume in the direction, then things are going to become a lot more interesting at that point. So we're looking at a down range here of around 165 pips. We're looking at an up range of about 95 to the upside right there. So yeah, I think you know, it should be a pretty good session here. It should be a pretty good session. You see, this is what we try and avoid most of the time now, is like this range that happens like an hour into London session, where we're going to have the market really tend to consolidate quite a bit. So that has been one thing I've been avoiding of late, getting stuck in accumulation like that. But as you can see, like very nice price action today. Like we're getting clean movements here to the upside like this. Beautiful swings in the market currently. So that is what we love to see, right? That is exactly what we love to see. If you look at this price action here, essentially what's happening on the HTF, on the higher time frame, how we're looking at that like a little bit of a fake out down below this region right over here, is essentially like the same thing that happened right here, correct? So that would be that fake out too below here, and then price shot upwards, faked above the highs, kind of like same thing that's happening here. Price came, faked below the support, short upwards. Now it is kind of like faking above the highs, pulling back down, right? So we just gotta wait and see. If we get a bearish break, you know, awesome, then we'll have something follow through like what happened here previously. Or if we get a bullish break, you know, that's also pretty good, because at the end of the day, we're just here to trade the market. We're not here to dictate where it should necessarily go. But those are the two areas that I'm obviously going to be seeing price moving from, the ranges above here and somewhere below here. There, the breakout might start a bit sooner. You might see the breaks coming in a little bit sooner here, possibly by 41.12. you could already start to see a little bit of movement there to the downside. But yeah, that is a very, very nice accumulation that we have formed. You can just tell. You can just tell that there's going to be a big move coming in a bit. You can just tell there's going to be a big move coming in here. Because whenever price going to accumulate like this, we're going to expect a big move. So we can say, yeah, pretty much just waiting for a breakout. Waiting for a breakout, buys above here, sells below here. Let's see what the Asia did. So we had pre-sessions skyrocket upwards. Loads of volume during pre-session. A little sell-off here. This was a sell. This is actually the sell that I took this morning. That was a sell that I took this morning. Somewhere like right up here. That was my pre-London sell-off. Boom, man. This thing just continued to run here. And it seems like it also hasn't really tested that entry point yet. It's still respecting that entry point. Because remember like yesterday's move? Like yesterday we had also, remember, the sell-off, but price created the support. It came, retested the entry for like around, I think it was like about 3 pips. 3 pips. And then price came down after retesting. Because typically, then we're just getting the market sort of like balance the entry when that comes, when that happens, right? But in this situation, looks like we didn't get any balance. It just completely melted. So it makes me wonder, like, how long does the market actually wants to leave people in profit up here for? Unless most positions have already been secured, it may not need to go back up here to retest that zone and then just continue to come down like this. But yeah, I mean, it is a probability game anyway. There are trades which do just continue in that probability, in that direction, without necessarily having like retest back at your entry point. Could just be a probability thing, of course. It's always important to secure profit because the probability of that sequence happening is, I would say, it's a lot lower, probably lower than 50% in such a big move like this, like such a big distribution like that. It's probably lower than 50%. So especially when you factor in the risk rewards being achieved by most players in the market, most players will already be out in a situation like this. You know, that's a pretty amazing risk reward situation to be in. You gotta secure something for sure. So now our job is pretty much just to wait and see, to keep monitoring the charts, waiting for key executions, or let's say key confirmations to be formed, and we'll take our trade and we'll have a good day here today, and then, you know, we're gonna move on to the next day and just keep building their account, keep hitting whatever targets that you might be setting for yourselves. And that's at the end of the day what kind of trading is, generally speaking, about. There's no real meaning in it besides the fact that you're just trying to accumulate riches. Right? So that's what we're gonna do here. We're gonna remain disciplined, stick to 1 to 3 trades. Man, you know, whenever I stick to like 1 or 3 trades, I have the best results. I think currently my trade win percent this month is on, since July over here, we're on 51.9%. And that's also due to the fact that I've been taking quite a lot of trades. You can see here, I took like about 6 trades. That was last week, Wednesday. Here I took about, what was that, like 8 trades. There's 8 trades. Here we had about like 4 trades. But you see, when you take less, sometimes when you take less trades, you're gonna have like better results even. Like today, I've already taken like 1 trade and up about like 5.30%, basically, right? Yesterday, we had about like 3 trades. 3 trades kind of got stopped out here, but then we still gave the trade the same bias. Made around 1350. 1350, and you know, today just taking this 1 trade and hopefully just gonna take 1 more trade and we don't have to fight the market. Right? We don't have to fight the market. Typically what happens is whenever you look at your trade results, whenever you notice that there's something wrong and you fix that thing that has been wrong, you tend to see like a bounce back or like some small kind of like an improvement, right? So that's why it's quite important to always remain diligent in the trading process of like how your results are coming about. Because if you find yourself in a cluster of losing trades, you're most likely going to have to tweak something, wherever that is, so you can have this sort of like a little bit of a better performance come back in again. So that's how we always do it. We are always going to acclimatize to the market conditions and making sure that we can always somewhat become profitable, so we can stay consistent and not get locked up in a cluster of bad trades. Just like in poker, you know, if they say they call this thing kind of like what is it, like a run of cold cards, right? Like even amazing poker players, they have a probability of having a run of cold cards, right? And yeah, you end up losing quite a bit. So you always got to remain quite diligent on how things are going, because also there's a saying in poker that you can't lose what you don't put on the table. Correct? So I would say the more you follow those kind of like foundational rules, like even in a game like poker, it's gonna be similar like trading, then you find ways to survive, right? You find ways to, because like poker and trading is a grind. The whole process is like a grind. So it's gonna take time to grind. You know, like when you're growing an account, you're growing an account at a steady pace. That's what we call a grind, right? So you can grind in poker, you can grind in trading, but you also need to know when to bet big. Otherwise, your whole life becomes a grind, and that's gonna take like a really long time. Correct? So right now on this specific day, I wouldn't say there's too much standing out for me to take like a big move, but we'll see. With the New York session and this little accumulation here, might get stuck into a move, might shoot up like 30-40 pips or down, whatever it is, and might see my 2% go to like 4%. We'll just see how that plays out. But yeah, this morning's trade was also pretty good in terms of potential runners, because we also had like clean range to the downside here from here to here, which was around let's see, from my entry point about like 50 pips. And then on the higher time frame, we also had moves room to continue to move down. Correct? So that was giving us like a lot of also what we spoke about yesterday, a lot of confluence for that sell-off, as well as we also had a small little liquidity grab above here. Beautiful, just like we spoke about yesterday. Nice little SMA crossover confluence in there too. So yeah, I would say that was a pretty clean move. So hopefully we get something of the sort, something similar of the sort that we can get involved in. Also the 1 minute, we got like a kiss of death happen though on the 1 minute too. So definitely had more than even 3 confluences at that point. But right now, I think the main thing is finding a way to avoid as many whips as possible, right? I don't want to get stuck in this range and then just get whipped. There's like a 90 pip range. But it's a good thing that I spotted this soon, because when I took my break, apparently some of y'all said that price was difficult in the previous 2 weeks to trade. And you know, that's gonna always be the difference between like somebody who's gonna break out of that struggle a lot faster than someone who's not, is that attention to detail. So you notice like in the previous 2 weeks it's been difficult. Now the question always remains like, what is the next step forward to combat that difficulty? Whether that's gonna be changing your trading times or what have you. So I managed to catch on that. I think that was on a Thursday. Yeah, on a Thursday over here. Because like I gave my trades several chances, and I was wondering like how that the trades weren't playing out until I realized that this is just like a volume thing, right? And now we changed that, and then starting to see a little bit better results like coming in this week too. So it's super important to always keep that in mind. Every single time you find like a tiny hardship, whatever it may be, that's a sign. You know, sometimes it's gonna be you gotta probably have like different reasons. Sometimes volume, sometimes it's your TP, sometimes it's your SL, and that's also been driven by the volume, like how big your TP is, like how many pips is it hitting before reversing. You know, maybe we're looking at something like 16 pips, 20 pips, 30 pips. Same with your SL. Like, how many pips can you see that your trades are getting away with? You know, sometimes for me, it's going to be like maybe the 5 pips. I said my 5 pip SLs, I've been getting away with those for some time now. 16 pip as well, pretty good, or 20 pip. But yeah, this is that we're always kind of like balancing the variables to see what kind of like makes sense, and how that risk reward is also going to be affected by the market condition. So that's going to be determined. How you're going to set these up are going to be determined. Are going to be determined by the market condition. So, hope you guys are doing well. I love hopping in and out of your streams in a few months. I love hopping in and out. Oh, nice. No major news. Let's see. Now, we don't... Trump is speaking. Trump is going to be speaking much later on today. That's at 3 p.m. though. The New York session open is going to be at 8 p.m. So I'm not too worried about this event here. But yeah, Trump is due to speak. That would be the only major news that I'll be looking at for today. $7.15. Still waiting on that volume. Doesn't look like it wants to go much of anywhere at this point. Lots of wick fake outs. Small little liquidity grabs happening here. Break below, come back down. Little wickage. Slow volume, push up, came down, creating like some kind of a small support over here. Little minor accumulation this is as well, right over here. You might see an early break. I might consider an early break. It's a similar situation that I had yesterday. Because on yesterday's trade, price was pretty much ranging like this. But I wasn't too worried about missing the move because, you know, it could just come in like a bit later. Because it's still the inception. So actually, that's what we're going to call the inception, right? Waiting for breakout at inception. So yeah, waiting for breakout at inception. Right over here. So I kind of like that even a bit better. Because I get a very good idea. On missing, you know, on whenever you have this feeling of FOMO, like the FOMO levels should be pretty low when it's still within the range. I only might be gonna get a feel of maybe a bit more FOMO naturally if price starts to do something like this. If it breaks, let's say before the New York session opens, maybe start to get like a little bit of an earlier signal and price starts to do that already. Yeah, then I think at that point, then my FOMO is also going to increase as well. But as long as we're down here, FOMO is low. If that happens a bit sooner, FOMO is going to increase because, you see, the market is not perfect. It doesn't necessarily have to move at 8, but it would be nice if it did, right? But in principle, it could just start moving right now. And then kind of like during that 8 time, you might even see something of the sort like this happen. That New York session opens up, and that was what we call now... essentially a pricing in for the move up so price can come back downwards. Correct? Then that's just all that's going to be. It's just like an earlier move to price it in for a move back downwards. So again, that's why it's important to keep this in mind. FOMO. To not let the FOMO get to your head, right? Because sometimes it could just be pricing in. And in the market, you never really miss a move, right? If you're patient, your move is going to come. And that's why we call it like your move. So that's the move that you are meant to catch. That's going to be your move. So if this happens right now, then this is just not my move, correct? Because I do see a probability once we start to break above that high, that buyers are going to come in, right? That's going to push price up to retest. We're going to come up and retest 41.35. No FOMO, just not my move, and then we're gonna see it. But this is still a pretty good probability. I think like as price starts to break above here, above this high, it's still a pretty good probability, right? Because essentially this is pre-NY volume. So like pre-NY volume on the break of the highs by 41.22 could actually give it like enough steam to kind of like move up a little bit more. So that's what I'm looking at. If you're also looking at something similar like this, that's the whole idea behind behind streams, is to see like what's the idea that other traders are having, right? And then you're gonna correlate that with what the idea that I'm having, and if that's lining up, you know, that should give you like a confluence and give you like a good confidence in your position. So yeah, I would say like the probability of that happening is definitely, let's say like 60%, definitely higher than lower, right? And you're gonna definitely see more buying happening over here and more selling pressure coming in down below that level. So I would say like about 60%, which is not bad. Pre-New York volume, got a little bit of confluences here, a little accumulation breakout at this inception. I'm seeing nice little 8 SMA hold as well below that 5-minute candle right there. And price is gearing up for a move. So we'll see. I want to see also if I can get maybe a liquidity grab confluence. Although there could have been like one right here. One right there, like a little tiny one at the lows before that little push up. Move that FOMO. But I want to see like, I want to see as we're approaching that New York, because you know the thing about session opens is you're typically going to see fake outs. Yeah, you're typically going to see fake outs. That could be like London session. Let's see if we got one today. I'm not sure. Let's see. Boom, boom, boom. Yeah, we got that London open fake out right here. We got a minor London open fake out happen right here. Alright, this is it right here. Pretty much just general region. But the more immediate one was happening on the lower time frame there. And then you got the higher time frame one right there. So you can say that more immediate one. So you are going to see fake outs around session opens typically, right? It can give you like a good hint sometimes of like what kind of a direction we could expect continuation. So we're gonna see like if maybe towards New York session open pre-NY, we might start to see some fake outs. Or rather we're just gonna keep an eye on maybe some potential fake outs happening above like 41.22. Might see some candlesticks do something like that, kind of like spike into that level and then also come in. So if you notice something about the way I do analysis, I'm not always gonna have just one bias and say that this is the place that price needs to go. I'm always gonna have multiple biases, because it's important to always anticipate like what the market can do if your trade idea, let's say if that doesn't happen. Correct? Because what happens most of the time is, let's say in a situation like this, you might just be looking for buys. You might notice, okay, you know, like Vic said, okay, yesterday trending market condition, but it's not exactly the same situation. This situation was a bit different here today. All right. But if you're just too preoccupied on this bull run and you're just looking for buys, guess what? You miss out on the sell. And that's going to happen enough times where you're going to start to realize that counter biases are needed in the market. You can't always have a single bias. A single bias, I feel like, costs people sometimes, especially like day traders, 5-minute time frame, 15, maybe even 30-minute time frame traders. Like, it costs them a lot. It costs them a lot of opportunities. Hey, AJ, good morning, good morning. It costs them a lot of opportunities. So I'm not one to shy away from a counter bias. But we're going to wait and see. We'll see how that lines up at the end of the day, ultimately as well, during this time with order flow. Because yeah, right now I'm seeing what 714, 722k. I definitely gonna lean more bullish, and I'm gonna lean a bit more bullish, but I won't kick the sells completely, because I see the highest volume candle or the highest push aggression push today was 3.8 mil. 3.8 mil. Hey, what's up? What's up? We got a member over here. Who's this? Hey, Rod. Welcome, welcome, sir. Welcome to membership. Oh, wait. We gotta put this effect all the way up here. There we go. Bro, I love speaking Russian daily now. Ah, very nice. Awesome. Твое русский будет очень хорошо. Ты будешь говорить очень хорошо. Добрый день. What's my trade, buy or short? I'm gonna wait. I'm gonna wait and see what the market says. It's still in a period of low volume. I see it's even like trying to flirt with this area over here, but it's still kind of having a hard time. Low volume, low volume. Even I would like to see it if price was to, let's say, just shoot above this level. At least that will confirm to me that we are having some kind of directional bias. You know, it's better than when we're just consolidating or like hovering. Like, mind you, this is just like a 5-minute time frame, but the overall range here has been ranging for since let's say 4 a.m, and it's almost gonna be 8 a.m. So almost like 4 hours. That would just been kind of moving sideways. So I would even be okay with like missing the first burst, getting an idea of what to do next. We might even get like a shotgun play above this area, 41.22, or even below this zone by like 41.12. That's the reason that I love breakouts, because they ultimately kind of show you what direction that price wants to go, and it removes the need for doing you know, sometimes when you do analysis like this and you draw your lines and you just wait for levels to hit, it removes the need for, like, I would say, waiting a bit longer. And then, like, either way is fine. There's no criteria for trading, but I do rather enjoy just being part of the market as it is moving, as it's breaking, as it's moving. It's much more enjoyable than, let's say, like, I would say, like, waiting for a level to hit like here, and then waiting, and hopefully the FOMO is not too much and that you can get stuck in properly. Because sometimes when you wait for levels to hit, maybe it doesn't hit completely, right? It just comes here and reverses, correct? Maybe it hits that level and then quickly reverses, and then you kind of, in theory, kind of miss a move, right? Whilst you wait for confirmation, because that can happen, like when you wait for confirmation, like it hit, then quickly like pull up. So there's a lot more variables to some trading a system somewhat like that, I would say, rather than going with the market like this. So you always got to identify what kind of a trader you are. A breakout trader? Do you like breakouts? Do you like levels being hit? And then really mastering the psychology behind those moves and the variables that come with taking those moves. Because, you know, like each strategy gonna have like different variables which are gonna affect it, and you got to see, like, for your system. And it takes time. You know, the thing is, like, when you're building a system for yourself, it takes time to see those variables, especially as you're working through psychology, taking maybe 1 or 3 trades a day. You know, that's gonna take time to really see how each market condition is gonna affect it. Yeah, I've been trading my system for like 6 years. I'm going to 7 years now. So let's just say 6, maybe 6.5 or something like that. But it's always been something that I've always kind of like been looking at breakout systems, like how breakout trades work. during the time that I was learning breakout systems, there was a guy from Singapore teaching. There was a girl as well from Singapore. And there was like Mamba FX. But most of my understanding came from just showing up and just seeing like how price moves during different times, and like what's the best way to take them, and how much more advantageous are they. Because the issue with breakouts as well, like sometimes you get faked out. So you got to see like, how can I best avoid a fake out, right? So certain ways you do that, but I would say like with experience, you start to understand a little bit more on how to take the best type of like an impulse entry. So you're gonna kind of like either feel it, or you're gonna see quick rejections, quick confluences. Sometimes it could be the smallest of things, which are like your broker candle doing this. Because you know, like when your candle starts to do something like this, and you're trading at a time of high volume, right? You know, like something is about to pop off. Usually when that happens for me, that's almost like a telltale sign that something's about to pop off. So best avoid fake out. You gotta experience how to learn like impulse. Because the breakout essentially is like impulse, right? Sometimes you can get the confirmations too. Sometimes you can get like a candlestick do this. Let's say like close below level like this, and then it like have that line up beautifully. But most of the time what happens on gold is that the candle maybe doesn't give you a chance to close, and then it just does that. Right? So you're gonna see that happen over and over and over and over again, and then you get a bit like better idea of like how to take impulse entries. But most of the time, that's what we say, it's still better to wait for at least in the beginning 3 plus confluences. Would say the breakout is not too far away, ranging in between the level, but got a nice bullish triangle forming. Yeah, man, we could have like a trend line here. See here, depending on how you came on it, because sometimes, you know, when you draw like lines like this, if you just came onto the chart, maybe you would draw that one. So then it's also about understanding like where price was before, because that would be like a break and a retest, maybe with that level right there. So if you're looking at trend line bounces, maybe you got something like this. Something like this, but you might again start to readjust this for a bigger breakout as we're approaching New York Open, and say maybe like on this next confirmation here, that's going to be a stronger break signal, just mainly due to the time that's been taken. So then the timing is going to be quite important. Then you're going to see like in hindsight that was a breakout, and that first one here was just a break and a retest, so maybe like a false signal. So you're just missing the time aspect of it, the timing. But yeah, you could have some line like this. The thing about this trend lines, you can draw them quite differently. You can also draw it right here. You see that could also change the entry by quite a bit, like that. Or if you're gonna use the candlestick bodies instead, kind of tighten it up a bit more, something like this. But I feel like to also remove that again variable, because see, with every system you're gonna have that to deal with. You're gonna have variables to deal with, right? So to remove that, I say if the market's just moving sideways, it's a lot easier to see when the market's moving sideways, right? Like it's less of it's more of an objective opinion than who drew the best trend line, using the bodies or using the wicks. So that I would say like that's kind of like important thing about trading is canceling out as much of those uncertainties as you can. So that gives you a lot of stability in your process. Because if you don't have that stability, every day is going to be a completely new day. Like some days you draw it right, sometimes you don't draw it right. And then obviously that's going to lead you to getting a different result, how your weeks are going to end. You know, maybe some weeks you manage to draw them somewhat good, but it's harder. It's harder to do it when a system has a lot more moving parts like that. It's not a naturally aspirated engine. You know, a naturally aspirated engine is going to be more reliable. When you got too many moving parts in the engine, that's where the problems are going to become. Like I got a pretty simple PC build, but that simplicity makes my PC into such a beast. And it's so reliable. Like it's insane. I don't have like crazy RGBs or anything of the sort like that, but it's just a beast. It's a simple beast. Like maybe, yeah, it's pretty good. Pretty good. I think once you have that system, then it's something you can lean up against a little bit more confidently. So yeah, that's why it's simple. Like you're gonna wait. We know what we're waiting for here, and there's not many moving parts to it. Because the moment, like, basically, let me explain this to you in terms of chart work. For the most traders, whenever prices are consolidating like this, they start to add more parts into the equation, right? They will start to do trend line here. They'll say, oh, you know, I learned about this trend line. Maybe they see Fibonacci retracement on this low to that high. So they really start to increase the moving parts, and they force themselves into taking trades and say, okay, you know what? I gotta go for this meeting here soon. So I feel like this is gonna be enough. Maybe we have like some nice small confluences over here. Let me just take this buy, because I see all these things are starting to line up. Right? Like we've all been here. Like I don't care what system it is that you trade. We've all been here, because most retail traders gonna share like a similar journey like this, right? Because when you're learning a lot, that's when you're gonna add in a lot more moving pieces too. And that's usually also the reason why most traders who learn a lot, actually, as a result, their P&L declines. They lose a lot more money because it's just too many moving pieces. Trend lines don't have to be readjusted. They just have to be placed wick to wick on the structure created. Try it with the top. Yeah, you see, that's your opinion. That's your opinion. You see, some people, they're going to use the candle. Because the way I was learning trend lines, they were teaching sometimes the candle bodies. And then some other guy would use the candle wick and the body. Right? So that's, you see, that's an opinion. That's why I try and have no opinion style trading systems. Like, is it an opinion for me to say that market is accumulating right now? I believe like we can all agree, or at least 90% of us can agree that the market is just moving sideways, right? So it's not really an opinion. It is moving sideways here for the past, let's say almost 4 hours. We've been stuck in this range, as a 100 pip range. So it's not an opinion, like we can all see it. And I think, you know, having something like that kind of like gives you more foundation, more grounds to stand upon once you start to get entry confirmations. So for example here, let's say like as price starts to come up, let's say if there's a lot of volume, and we know the New York session's opening up in like 20 minutes, right? It's not going to be an opinion that there's volume during the New York session. So now we're getting two things. We have an accumulation objectively and volume time objectively. So where does that put us? It puts us in a situation where we're able to sample size. We can sample size now concretely this sort of like you know, this sort of like area here and strategy. We can sample size it more concretely with aspects which are not driven by, oh, you know, if it's a wick that you gotta draw, or if it's a body that you gotta draw. And that's how you don't waste time. Because the one thing that I always told myself, like in trading, I just didn't want to waste time, you know, because I've had students who've been trading for like 5 years, still not profitable. Even more than 5 years. This one guy in Texas I had a one-on-one with, he was about like I think he was, how old was the guy? He looked like 70 or something like that, right? And he'd been trading for like around, I think 9 years or something like that. And it's like, yeah, he finds passion in it. He doesn't rely on the income. But it's like, for me, I don't have anything else, so I have to make this work, you know. I can't rely on a salary, so I don't have 9 years to like waste on concepts which don't hold much weight for me personally, you know. So yeah, I think it's a huge difference between, you know, that's the thing, like if you have to make it work, you're gonna find ways to make it work, right? If let's say you only had this year to live, and surviving next year, you had to be a profitable trader by the year ends, that you already had to be consistent and profitable, right? You would not waste a single second of the day trying to move correctly, taking bigger risks, like in terms of pushing your limits to what you can achieve. You would probably be profitable by the end of the year, to be fair. It's just like people think they got time, you know, like, hey, I'll do it tomorrow. But, you know, when you want something really bad, all you think about is that. Like, when you go to bed, you think about it, constantly think about it. Like, even as you're sleeping, nights I used to sleep, I would wake up randomly, maybe shortly before I fully fell asleep. An idea would pop in my head from something I saw a trader do maybe throughout the day, and then grab my notebook, go into the office, and then jot it down. Like, this was this, let me try this tomorrow morning. Go back to sleep, maybe get like 15 minutes. Another idea pops back, and you're constantly thinking about it, because like at that point your life depends on it, you know. So I would say that's a difference, because the thing about trading is there's no ordinary profitable trader. Like, every trader you know who is making a consistent profit quarter to quarter, they're doing an extraordinary thing. There's no way that an ordinary effort is going to make you an extraordinary, like a profitable trader, because every profitable trader, even if they're making 1% a month, 5%, 10%, they're doing an extraordinary thing. So you can't expect to get what you've never had by not doing what you've never did. And it really is just that simple. And I think once that clocks in properly, that's when like change starts to take effect. That's when you start to realize, like, hey, you know, now I thought I wanted it before. Now I know what it feels like to really want something. You know, because sometimes people kind of like just kind of want it. They don't really want it. They kind of want it. Starting to get a little bit of volume in. How much have we got? Like 20, still like about like 20 minutes before the New York session there opens up though. I'm still going to be looking for sells below, maybe even here. Yeah, probably like below here. We'll see. We'll see. Let's see if we can break away from this area a bit, would be also good. Because right now it's a bit too early for me to determine, like, because there are breaks happening at the moment though. We are already starting to get breaks within this range, correct? But the problem is there's a lot of information here that it's like it's breaking wicks, but you don't know which one is gonna be the main one, right? It's like, see, price is breaking right now, it's pulling up. It's not as obvious because these candles are just kind of like clustering up together. So if you're gonna take a shot through that level, I think it would be nicer taking a shot as we get more activity. You see, like right here as well, activity kind of slow at this moment. You can see a lot of spaces in between, so we're not getting too much market participants involved. So when we're looking for like a push or an extension, going based off of this, it's not giving much a... Oh, you see now it's increasing. You see here? Look at this now. You see here? You saw how that just increased like this. So that's kind of something that I'm going to be looking at. So yeah, we're gonna look at that in a bit. So that's what we want to see. We want to see a little bit more orders coming in. Probably gonna take a trade here. It's probably gonna be a good trade, fast trade, maybe like aiming at 2%. Trying to limit my loss if I do end up taking a loss. Try to reduce that as much as possible. So at least I can remain in the blues for the day. And then do that again tomorrow. Very simple, very straightforward, clean, or rather what we call organic trading. All right, nice. Volume starting to come in. Getting a little bit more. Oh yeah, that looks pretty good. Oh, classic pre-New York. This might be the break right here. So what you might be feeling now is maybe a bit of FOMO. So you might want to jump in. Correct? You might be feeling a bit of FOMO right over here. Because there's a chance that we're going to miss it. There's a chance sitting on our hands like this that we're going to miss it. And then we're going to have that pricing in. This could be the pricing in for pre-NY volume. There's a chance you're going to miss it. So as you're sitting on your hands over here, have you accepted whatever your entry confirmation is that you might miss it? Because like sometimes we're going to draw a trend line like this, right? You got 30 seconds for that candle here to close. Now that could be an entry confirmation for someone trading trend lines. Correct? Because now you got to say to yourself, like, am I going to wait for my candlestick to close, or was this an impulsive entry? Because as you're waiting for candlesticks to close, sometimes the candle is just going to go like this. And during that time, you just say to yourself, or you repeat to yourself, that I am okay with missing that trade. Most of the time, even if you wait a little bit longer, you end up avoiding most fake outs. You get good at waiting just a little bit longer. By being okay, by missing the move. You okay with missing the move? Typically, you end up catching the really good moves. Now, you see, like for me, that zone is becoming a bit more clear for the break for later, potentially if we do move down. Now that's becoming a little bit less objective because now we're towards the what is that? We're towards the tail end. We're towards the tail end of that range to the lows there. So, you know, whenever you're getting breaks in between here, there's a lot more detail, right? There's a lot more levels that you got to go through to confirm that movement. But you see now, there's not many levels to pretty much go through as we're coming towards the tail end. So that's going to make it a little bit more clear. Like 50 more minutes. You see, I think it also at the same time could be waiting for New York Open. That's why it's kind of flirting with these levels. You know, the annoying thing is like when you FOMO into a trade, correct? When you FOMO into a trade and then you find that it's still not moving anywhere. And then maybe it's like, you know that the New York session is going to have volume, but you end up taking more trades than you should before that New York session opens. And that tilt is happening so quickly. As you see, we're approaching the new hourly candlestick open. It's going to maybe try and entice people to give some attempts. Maybe you're going to feel like a little bit more prone to FOMO, fear of missing out. Then you end up kind of giving yourself like these, what we call like paper cuts. You give yourself paper cuts before the actual move. How do you integrate with the order flow? Just listen to the stream, stick around, write notes. But it's called ExoCharts, the software that I'm using. Hey, Lingswaran. Thank you for the sub. Appreciate it. Let's go. Do you have any advice on where to place SL and TP where we enter the trade? Anywhere between this range, 5 to 20 pips. I think should be sufficient. 5 to 20 pips. Looking at TP targets around 16, 20, 30, 40. And back into the range. There you go. See, little false little breakout over here. It tried to break out, but it didn't really convince itself too much. False little breakout. Got 10 more minutes. Usually the last 10 minutes of the hourly can actually get really interesting. Last 10 minutes before the new hourly open, sometimes gonna have like a really big push. We just had a liquidity grab on the hourly too. So if you look at this right over here, hourly just had small little liquidity grab towards the lows as it's trying to pull up. That was that new lower low that was formed. Not true. Thank you for the sub, man. Welcome to the squad. This is a nice small little liquidity grab right there on the hourly. So it could be giving us a hint of the direction we might want to go. But you see, in this scenario, either side it chooses is a pretty good side. Because like if you get a buy, you have a huge buy level from here to here. Correct? If you get a sell, you got a fat sell level from here to here. So I'm not going to discriminate on buy or sell at this point. But right now, it looks like, of course, the candle is just fluctuating. It could also just flip in the next 5 minutes. But it now looks like it wants to move up. Correct? With that little liquidity grab. So we're just going to wait. We're going to wait and see. That's right there on the hourly. So hopefully that lines up nicely. You can get locked in and then not also end up like missing the move just out of not being focused. Because man, sometimes when the candles decide they want to move, they're gonna move so quickly and it's so easy to miss it because you're not 100% locked in. But I think like as we're approaching towards the end of the month here as well, we are getting we may be seeing that monthly candles to give us like a equivalent of like a Freaky Friday end of the week volume. But now it's like with the monthly candle doing that. So as we're approaching the end of the week, end of the month, expect a little bit more volume. I'm seeing it's gonna see if I can push my P&L to like 30%. Expect a little bit more volume. Yesterday's move I should have actually made like 4% at least. 4%, but I think I just, you know, secured. I was like happy with the profit, but man, I should have waited like 10 more seconds. We'll see what we're gonna do here today. I'm at like 3k. If I can get anywhere above like somewhere like 4k, that would be good. 4k and above. So that will put me at around, if I can get like at least 4k, then I'll be sitting about 8%. Then I think that would be pretty nice. And hopefully we don't have to fight the market. And hopefully I don't have to fight the market. And price just moves in my direction because we've been patient, we've been disciplined, we're following our rules. And we're going to have like a good, clean fight. A good, clean fight. Because, you know, like sometimes what the market loves to do, it will fake you out once and then you have to give your trade like a second chance, right? Pretty much what happened to me yesterday. You get faked out once and then you have to give it a second chance. Typically on the second chance, you're going to have like a higher probability of it playing out. What direction are we gonna price in, guys? What direction are we gonna push? Bullish, bearish, bullish, bearish, bullish. Because I'm thinking like this position still hasn't been balanced up here from my earlier sell. Maybe we're going to push up, like going to price in like yesterday's move. Like yesterday we took a buy. Pretty good buy. Price came up, hit the target, and then came down. So I got a feeling we might be seeing that. Something similar like that happen. Because like this area here has not been balanced. How long the market's going to leave that area open. Alright, so we got 5 more minutes. So the next 5-minute candle here should be giving some pre NY volume. Let's see here. Yeah, it's coming in. It's coming in good, looking healthy. Maybe just look at these two hourly candles on the order flow. Because now I kind of want to see this. I want to see how this is gonna build up. Because now I gotta start slowly getting ready over here. So far, this candlestick seem quite small. That 5-pip zone looks big. Sometimes that 5-pip zone there looks like super small. But right now, I think because the candlesticks are been ranging without much direction, like it's looking kind of big. But you know, it's all right. It all just gives me an idea of just how much volume there is too. Because sometimes you gotta scale the candles, right? Like if you just look at a naked chart like this, some days this range, if you don't measure your candles, this like 100 pip range can be on some other days like maybe even like 130. But it could look the same way. But it's just because you're not measuring it. Expect volume to come rushing in at any point. About like three more minutes. Would be nice if this candle here closes on the 5-minute before the breakout. Two minutes before fireworks. How much lot size do you use? You're gonna check on my go on my YouTube under posts. You're gonna see. Now the funny thing is, the only thing that's changed is the lot size over the years. Like, you know, you start with like maybe a 10-cent lot. You start with a 10-cent lot, increase that 50-cent lot, 1 lot, 2 lot, 3 lot. That's gonna change over the years. Volume's starting to come in. I do think I will wait. I will wait for at least this candle here close. I got like 1 minute, 1 minute, 15 seconds. Volume looks like it's kind of slowing down there. It's a New York session open. Now we're starting to see volume is coming in. Watch the order flow. Awesome. Securing this. Let's freaking go. Beautiful. Perfectly lined up. TFX concepts. See, I said pay attention to this right here. Amazing. Now that's what I'm feeling. It's gonna come and retest this area up here because that was a sell I took this morning. Like I'm still surprised it hasn't yet balanced that area out. Like it's still holding that zone. So I think, you know, the buys they actually make kind of like a lot of sense. See if it goes up. So I just secured around let's see, 2,190. That's gonna be around 4.38%. So that means I'm up now on the day 10.5%. Oh, you can't even see it that well here. 10.5%. Let's go. Beautiful. Make sure you secure something if you took the trade. Things skyrocketed. I actually closed like right here. This is where I closed, right over here. And it still has room to move up too. Like you still got room up until that resistance point. Whether it goes up there at this point, like that's what it can do. Can do another like 60 more pips in principle. And looks like all this was just accumulation waiting on that New York session volume. So you can see now we just had NY open volume confluence to drive this move here up. NY open volume confluence. And then I had here pre-London volume confluence as well to drive that move down, where we also had a liquidity grab just by this level right here. So we got LQ, liquidity grab, boom, boom. Also got another LQ, right? Maybe just say liquidity over here, liquidity grab here, and here on a much bigger time frame. You can see that. That's also a grab that happened right there too. Let's see. So this should put the month. Let's see, 26.6%. 26.6%. Awesome. I'm gonna do it again tomorrow. That's it. Frankie, I'm holding. Oh, nice. Let's go. Bombaclat. That's a bombaclat. How many pips is this? Heading to 30 or 30. Very nice. Yeah, it's good volume that's coming in. It could be a little bit more aggressive. I would say like on the entry was a bit more aggressive though. But the follow through could be pushing a bit more, but it's still pretty decent. So we just had the breakout here at inception, right? So this is still, remember, like the session opens can still give potential fake outs, right? So this could be a similar thing like with that New York session push that we had yesterday, where it just priced in the move, something like this. It hit the target and then came down like that. Then completely melted later. A breakout at inception, so it would still need to reform like a little bit of structure here to give like a continuation. So if that intro was not taken, that means that you gotta wait for like the next entry. Sometimes you see the problem with like FOMO is that move, it could have technically happened, let's say 5 minutes before the New York Open, but that happened exactly at NY Open. But you see, it could have in principle happened on this previous 5-minute candle right there. Correct? And then you find yourself in a situation like this where sometimes it wouldn't even give you that re-entry, but this is going to be like a shotgun play. Basically, this is like a shotgun play. Candlestick broke above resistance, clean range, and then re-break of the previous highs. So that's shotgun play. Right? But if that happened prior to New York opening, it becomes a little tricky here because you would have to wait again for like maybe even like a 1 minute breakout continuation, which it's actually trying to form right now. We're already up on delta like 1.5 million too, so that looks nice. See, volume is starting to come in again. That's starting to kick up too, so that's also looking pretty good. 1.5 mil. It's still setting up this little accumulation on the 1 minute. It might see that little break continuation. But you see, it's always better that if you can get it as soon as possible. Like for me, I feel more comfortable. See, it still has a bit of room even up until like 41.28 there, just so it can tap into this zone again. That's why I like trading like objectively, right? Because see, that's why I mentioned in the beginning of the stream that this is an objective accumulation that we're all looking at. You know, like we can all see that price action is moving sideways here at this point. And objectively, the next volume time is going to be here at New York session open. So you see, like the more objective you can become with your trading, the much more consistent, better outcomes you can get with your positions. That's it. And now what's going to happen now? This is essentially here in a distribution. So we're still in a distribution phase. It's in distribution / setup because I see it kind of held this position for a bit. So on the 1 minute, it's kind of set up a little bit of structure. But it's in a distribution first phase. then setup second. The setup phase was mainly here, down here at the inception, right? So that's breakout, inception, setup. That was the main setup. Now it's distributing, paying out orders. This is where sometimes it get a little bit tricky at this point. It can get a bit tricky, but that would still be the second push. From this as the first push, that would be the second push. So it's still kind of early, right? It's still early. And there's still room for prices to still move up towards like 41.34. So that is actually still, it's still fresh. It's still a fresh signal. The thing is, you wouldn't be looking for sells here. Like even if this overall push up becomes like, let's say a liquidity grab, like an LQ, you wouldn't be necessarily looking for sell here. It's too early because like volume just pushed up. So if volume just pushed up and you're already looking for a sell, most likely you might even find yourself faked out. And that's the most annoying way to lose. It's like you've been waiting for 4 hours within this range. It finally pushes out and you want to already take it down. You take a sell and then it keeps going against you. Even after it shows you the direction, that can be like a really annoying way to lose a trade. Correct? Because you wait so long. Then pushes up, you take a sell and it keeps pushing up. Then you're like, damn, I waited 4 hours for that breakout. And it finally broke out. So I would say until like at least price comes down, let's say like at this very moment, comes back into the range and sell aggression steps back in, I wouldn't be looking for like any sells at that point. I would still be looking for buy confirmations. Where can I get the DX feed? Type in Google EXO charts. Type in Google EXO charts. Then that's where you're gonna get the. That's where you're gonna get it. That is where you are going to get it. It's pretty nice, right? Export. EXO. We got it written right over here, sir. Use the EYES indicator. It's been a game changer for me. Like this, I started using order flow like this year to give my trades more confluence. You can never have too many confluence, right? That's like one thing you can never have too much of. Just had like a small little swing low on the 1 minute time frame. Might be trying to push back above the highs by 41.26. You see, that's what I meant. We could make 1,000, we could make 2,000. It just kind of depended on like how price was willing to push for me. So essentially, I want to close like 1,600 at least, but we managed to close at about 21.90, so extra $590. And I would say that's kind of the pros of having more refined entries and trading with volume, is that you get to maximize your gains. And the only thing you can actually control is your losing trades. Correct? You can always put a hard stop loss. You can always kind of better manage your losses. If you want to lose $500, $600, you can always manage that pot. And then if you know, the beautiful thing about also having a tighter stop is when you're correct about direction, it maximizes gains. Correct? When you're wrong about direction, you can still control the risk by cutting it. Correct? So it's just similar thing that happened here as well. Boom. Took a 16 pip stop on this. For this to use like a 5 pip stop. Now let's see. It's like deciding what to do, because remember we spoke about with the session opens, sometimes session opens can create fake outs. Sometimes session opens that they like to do this little fake out thing. So whenever you see like price break a key level of structure during a session open, I would always remain kind of wary about it. You know, just be a little cautious about it. Sometimes you get like these kind of like V-shaped reversals like this. There's something that can definitely happen. Right now, it's still looking good for continuation though of gold. There's no reason to think that it's gonna sell at this point because we're like 1.2 mil on delta and it is breaking out. It is moving up bullish. So unless we start creating new lower lows, start breaking wicks, I don't see a reason to think that's gonna fake out yet. Vic, where to start studying order flow? Any course you think is good? All right, so you know the reason why order flow works for me, and I was able to pick it up within a time span of basically what felt like a weekend, or like I remember, for those of you who've been following my stream, you know my journey with the order flow. I think we started on like a Thursday. I got the software running by Friday. Saturday, Sunday, I got on Thursday. Friday I was paper trading. I didn't even stream on that Friday. I even sent on the group in the Telegram group here that what I'm looking at with the order flow and how I'm seeing that it's playing out. And then by next week, the following week, we hit order flow. We had amazing results with the order flow. I got too excited, took a pretty fat loss. I think I lost like 10k because I had too much confidence. And then after that, we just started refining it a bit better. So I would say like the reason why it worked for me is because I already have a foundation. I have my way of trading TFX concepts. So it's just layering above. So if I give you and say, hey, go study this order flow course, what you're doing essentially is you're just accumulating knowledge that you might not need. So you might know everything about order flow, what's a bid and ask and how those operate, but you still won't be able to make money. You see, that's going to be the difference between using a tool to help you make money and then just using a tool just to know how to use it. Because if you just want to know how to use it, I don't even got to recommend a course. Just go on YouTube. Go on YouTube, watch a few videos on ExoCharts if that's the software that you want to use. At least you should ground it in something that you're going to use. So at least you're a bit more familiar with the platform. But remember, this is just like an additional thing to what I was already been doing for the previous like 6 years. Except it's just giving me more confluence in the type of like trades I can expect to see. So it allows me to like push my P&L up a little bit more. Because I don't want people to get stuck in this thing where you're constantly like learning. You're like, oh, order flow, let me learn that. Oh, this guy started like using this other concept. Let me learn that. Yes, sir. We don't want to waste time. It should be a sin to waste time. Especially in trading, it is so sinful to waste time, in my opinion. I wasted time for 6 months. But of course, like in the beginning, you got to waste time so you know as much general knowledge. Right? So we can learn as much general knowledge. What's a trend line? What's a Fibonacci? What's candlestick patterns? What's this? What's that? But after 6 months, you should be already thinking, what do I see myself as? A scalper? Okay, I like scalping. What can I trade? Breakouts? Wyckoff theory? What am I grounding myself in? Support, resistance, supply, demand. And then you start kind of like finding that, finding yourself not wasting any more time once you get to this point. We don't want to waste time because, yeah, we just don't want to waste time. With the amount of knowledge as well that's available to us online for free, it's sinful to waste time. Let's just be fair. Because if you think about it, in 2019, 2020, like let's say like 2019 and before, there wasn't as much information about trading. So like people, it existed, but it was not as popular as it is like now. But getting that information was a lot harder. Like especially 2019, I'm pretty sure there was only a handful of people doing it live on YouTube, maybe like 5. When I was learning trade in 2020, there was only a handful of people that I knew who were doing it live. right? So like that access to information was just not there. But now we have so much access to information. It's a sin to waste time. Like, how are you going to waste all that time with all this knowledge? It's still trying to push up here. We're still trying to head up towards what is it, like 41.34. Still in distribution. No reason to think this is gonna flip anytime, guys. Like if you're trying to look to fade the move or anything like that, it is a lot more risky, probability wise speaking. Trying to take a sell here. Even though sometimes the session opens can fake out, it is still more risky to assume this. You never want to assume. You always want to see first. If it follows through like this, then you say, okay, you know, maybe that's a potential fake out, and then get your confirmations for the continuation. I would love to see a bit more of a push, because the New York session open, it hasn't really been. There's a bit of activity, but it's not that aggressive. Well, the initial pushes were aggressive. We're up 1.6 million, but in terms of the orders coming in, it's not as active. They say over retested. Yeah, we're getting quite close to that retest as well. But to be fair, there are probably entries taken in here as well. You see that? Because this is a much obvious break of this low right over here as price came down to fill this range. It was like 40 pip from that wick. You see, that's a little bit more obvious. So it's kind of hit it to the T. But like the other entries, we got like entries a little bit higher up too. Those are the ones I'm most interested in seeing right here. I want to see how it's going to react off what's like 41.28. Because sometimes with reactions, what you get is even more sellers coming in. Oh, let's see. And then sometimes you get like, you see how it spikes to that? You get a little liquidity there for them. Well, because it's a different time, right? So this move happened pre-London. This move is happening in New York. But it's spiking into that area again, so we're going to kind of monitor this. That used to happen to me in my first year of trading. I would have these big stops. Look at this, volume starting to kick in as well. You see this? As we're approaching now that London confluence. That London move was amazing. That was a freaking awesome move. Congratulations to those of you who saw and caught it as well. We sent out the analysis for it. But yeah, that was an amazing move. That was huge. Like pretty much that was the only move today. You see this? That was the only extension that we had on the day before price started to accumulate orders like this. So you see why that's so important as a level. You see? Kind of like spiking back into it too. So if you actually objectively look at the chart work today, we've had this move down. 90% of it has been accumulating. 90% of it has been accumulating. And now we're getting another distribution right over here. Now we're getting another distribution. So we could even see, you know what I ideally would like to see is a bit more of this. Even much further extension, just the same way that we had during pre-London. I think I'm blast to that level. Still flying here. Didn't think it like hit the break even, but it came like somewhere around. Maybe it did if you get a bit of slippage. Yeah, this used to happen to me a lot, like holding moves too long. So I have like a profitable move like this and assume that it can just keep going down. And then later lose such a beautiful move later during like New York session. And then go from like having profitable trade to losing trade. Then I started realizing that market don't want to leave you in profit for too long. So it's always going to be better, like even if you took this buy here to secure something, you know, like you're still holding it, like secure like 80% and then just let the rest run. Get it right. Exactly, going to sell now? Not yet, sir. Not yet. Well, all right. Let me not say not yet. Let me not say not yet. Everybody got their own opinion. So let's see. I feel like it should just keep moving up. Let me see here. Yeah. Let me not say no yet. Yeah. It could sell now if you think that it's gonna sell now. I think price has like 27 more pips. Like it could do a little bit, but for sure it's filled this range like a good amount. I'll give you that. Like this has been filled, I would say more than 60% of this range here has been filled. Right? More than 60%. This is actually a nice little shotgun play as well on the 15-minute. 15-minute candlestick. If you notice, 15-minute candlestick closed above that resistance point right here. Then the next candle broke the highs. Clean range. You see, very beautiful, like very beautiful, clean setup. So you see what I mean as well, like when price is very set up, like when it's set up like the way it has today, tomorrow we're going to get a different situation. That's why it's important to come to these streams so you have these sample size images in your head of how different days can operate. Correct? So we've been here before. It's not the first time, it's not the last time. This is going to happen again next week, maybe even this week it might happen again. But the important thing is you're showing up, you're understanding the sample size of this little bit of structure here, because every day is slightly bit different, so you get like a good understanding of what to expect. So I think with this move, like very clean move, very clean. It actually made more sense to move up because like of all these liquidity grabs that happen below here, and it actually looks just cleaner generally speaking once it broke the highs for the buys to move up bullish. Because if it was going to come down, you still have to get through like a minor support level there on the 15 for price to break through that level for it to come down. So yeah, I think like it happened just the way it needed to. But even if it did come down, rest assured we'll be ready for that too. Oh, now it's taking out the London positions here. You're right to the T right there too. Pre-London confluence, NY open confluence, distribution phase, breakout from inception setup, liquidity grabs to the lows on multiple time frames. These are lower time frames, these are bigger time frames. Directional bias confirmation with NY open, 15-minute candle, shotgun, 5-minute candle, shotgun, accumulation breakout, SMA confluence. Like this is how you want to think. Order flow, we saw volume increase, delta 1 million. These are how you want to think whenever you're looking for some kind of consistency. But you see, the thing is that you got to have this confluence already in your playbook. Because if you don't have them, you're not going to see them and you're not going to be able to align yourself with them. It's the same way like someone says red car, you start to see more red cars. If you don't even know the red car exists, you're not going to see a red car. Peter Weber, thank you for the sub, man. Welcome to squad. You're not going to see a red car. That's why sometimes when I take a trade, it might seem like a random trade. Like, hey, why you take a trade right here? It's because you see it from a different perspective. You see it from a different lens. So you can't see that entry. But that's why I say, like, if you join the the VIP community or exclusive, whatever, just go through WAP, go through the label charts. I think the first thing you got to go through is label charts. Go through those label charts and then go through the simulations and then hit up the 4-day bootcamp. And then naturally, it just starts to make sense. See this? Look at this. It's still moving up here. We're going to do it again tomorrow. Just tune in the stream. We'll do it again tomorrow. And watch the reels that I post. And then look at those reels and try and make sense of them. And that's how you get better. Pre-London volume. All right, so the price is now filling up the range. We still had like, what I said, like 29 more pips, 30 pips. Beautiful, man. Like, we literally caught the 2 moves today. Boom. Boom. And look at that. And all that we pretty much had to do was wait. Turns out it was a bumbleclot. And wait. And you see, to remain like this consistent within this cycle, it only requires showing up same time every day, doing the same thing. And some days you get that, some days you don't get that. But you can't always chase to have this, right? You have to remain still, keep doing your thing. Someday you're going to get it, someday you're not going to get it. Just like any other kind of a strategy, right? But it's about being consistent. And then having these images in your head of different market conditions and what to expect. So remember, if you watch back to the stream, I said we're going to have a big move with New York session open. Because what happens, like when markets range like this, what typically follows is a big move. You see like 100 pip range right over there. So we've just basically done the volume of this range. It's like 100 pips. And it also lines up beautifully with that resistance point. So that's going to be like a rubber band. And that's going to be the expansion, right? So we're going to... Yeah, this is going to be the expansion out of that zone. And trading is just waiting and waiting and waiting and waiting. And that's why we also say sometimes the best thing that helps you catch those trades is just by sticking to 1 or 2 trades a day. So you see, now this is a perfect time to explain why this is usually recommended, right? Like it's like 1 or 3 trades a day. Because majority of it, technically that's how you want to think about it. You don't want to think about it in terms of like all these moves that you could have caught within these areas. You want to think about all those moves that you could have taken a loss in. So what essentially happens is you're going to take 1 trade and then you're going to take a second trade. 1 or 2 trades a day. So you can avoid as much of this as possible. As much of that range. That's where like 90% of people are getting stuck in. That's where most people are giving back their profits. Don't be part of the 90+% of people. Especially when you're not yet been consistent for like at least a half a year. You know, like even a whole year if possible, right? A whole freaking year. The problem is you get too confident too quickly and you get humbled soon after. So at least give yourself like 3 months to 2 quarters. Like, you know, at least, you know, that's just 1 quarter. Quarter can be different. You got Q1, you got Q2. And each quarter gonna be slightly a bit different, depending on the macro fundamentals. Now we're in we're the beginning of Q3. Gold climbs to 2-week high as investors watch Middle East conflict. Long time no see. What's up? Love your life. We changed the stream time to New York trading NY session. But like pre-NY, NY open.
Why are you running? Why are you running?
This is still distributing. How many hours you streaming? Like two hours, I think. This is still an expansion. You want to wait for structure to come in. Let me just see on the 5-minute. Yeah, we just completely filled up that range on the 5-minute now towards resistance. It's still like 15. Yeah, the 15 minutes been hit. It's actually a lot cleaner to see on the 15. If you remove that analysis, you can kind of see it a lot better, right? Now when you remove the chart work, it feels a lot better. So there's not too much happening. You're able to see the naked chart work. So essentially you can see that that's again the fake out here. But even if you don't consider that as a fake out, we can see that this has been accumulation within a range, right? Especially when it dips like this. This is why I like to call like a valley. So it kind of creates like a little valley over here, right? Boom. That's the top of the hill. Take profit zone. See like maybe some profit taking here. 15 minutes, a lot cleaner. 5-minute is showing mini resistance because you have one resistance here. Then the 15-minute, it cleans it up. You can see boom, boom. So what can we expect here now? Remember, this is a setup phase. This is distribution. This is a profit taking. So what can we do here? You know, what can we do here? Now, what we can do is wait for retracement. After profit taking, it's retracing, typically. Retracing and then giving the setup again. Then it's going to go back to this phase. Maybe on the LTF. 1 minute, 5 minute. It's going to go back to this phase. Setup again. Maybe that's now when the sells can be coming in. After hitting the resistance. Come in, set up, and then maybe get a sell down towards this next support. That's going to be by 41.15. Right? And then you're going to have confluence here. Maybe now candles are going to create, like, let's say a support. Maybe it might try this area. Then you start to notice some sort of rejections like that. And then next candlesticks try to come down. Maybe tries again one more time and does something like this. Then that's going to be looking like really good because now it has taken its time, just like it took its time down over here to give like a setup that's like much easier seen. Like this is a much easier seen move than what sometimes tends to happen like this, right? So the one I took this morning, fake out here and then sell here. So it only spent maybe roughly 15-30 minutes before the move sold. Here it spent like 4 hours before the move went up. So because you're trading in a high volume time as well, it may even take less time this time than it did before here, pre-NY, to give you the next setup to come down. As we just hit that resistance. If you go on the 5-minute, still nothing too interesting. Still nothing too interesting, you know, nothing that's standing out, correct? Like if we look at this chart right here, if we rewind, does that look a little bit more interesting? Like it seems like Oh, let me cancel this. I think it took me to a different time. Yeah, like this. So you see, it looks more like setup. It looks more setup. The opportunities just seem a little bit more setup. And that's another aspect of learning how to trade that people maybe don't put enough emphasis on, is getting this feeling, you know, like when we backtest like this, you kind of get that feeling a bit better. You get a little more clear in your mind's eye of how that feels like, right? Like that feels more of like a setup. Like it hasn't moved anywhere. It's still accumulating. And then that's the move right here. So how do you feel at this point? You always got to ask yourself a question like, how do you not feel at this point? After the move has happened, this is where it can get a little bit confusing. What to do next? What to do next? Wait. At least on the 5 minute, if we can start to see maybe this small range here get broke, you got like 37 pips below the support, 41.24. Right? If you go on the 1 minute, still nothing set up because it's a V-shaped reversal. So it's nothing too appetizing, right? Unless maybe now we start to see something like that happen. All right, let's say it does that, kind of like plays around in this area for a bit. Now then it starts to get a little bit more interesting, because now that's going to be setting up like either a continuation from this or a reversal from that area to come down like that. So until like we gotta like wait basically for that, because now this is just all like V-shaped reversal. Can be like a little more tricky. How's SpaceX doing? 123. Holy! Talk about a rug pull. This is like SpaceX, the highest valuated company. This went to 225. Remember what I told you, Chad? Like, SpaceX on paper didn't make sense because Elon Musk is he's leaning more into AI than space exploration. Like if you look at the flow of the money is being deviated towards like AI, right? So it kind of makes sense. This why whenever you're gonna invest in things like this, you gotta do so much due diligence when you get into stocks, right? People don't typically do this. That's why Warren Buffett is so good at what he does, because he's really good at investing in people and understanding how companies are doing and making their money. But people are gonna get this one based on hype. Like a lot of hype. Yeah, so you got like a huge rug pull situation here. Let's see Bitcoin. We haven't looked at Bitcoin in a while. On the quarterly breaking below support. Looks like BTC it should be heading down. Let's see, what do we tap? 50k. Yeah, we're expecting Bitcoin to keep coming down like 40k. Like what this range from here to here on BTC. I think like that next target, psychological mark will be like 40k. 1, 2, 3. That's going to be BTC targets. No reason why Bitcoin should go up unless it like maybe starts to break above these highs and respects 76k. Then it can come up. But still more bearish on BTC. GJ. Let's start on the quarterly. Moving up for the quarter. Lots of range to the upside too. On GJ should be moving up for the rest of the year. Nice little expansion as well. You can see on the monthly, it's in the bull run. Weekly is also breaking out of the accumulation right here. You got that resistance. And we can just draw like a line here. And then, cancel that. Draw it here. Breaking out on the weekly time frame. See the getting a bit more detail on the daily too. Fake out situation. Early breakout here. Break and retest. Back into the range. Break, retest, boom. The 30-minute. No, let's go on the 4-hour. It's moving up though, that's for sure. Let's see, got a little trend line situation here too. Breaking below, but overall still bullish. Got the support area as well. So we just broke above resistance. That's like quite interesting. Because GJ is in it's in a really important area here. Because we just broke above this high. And we just create a new higher high. And now GJ is retesting this sort of like structure back over here. All right, look at this volume. That came in during New York time. So it's on the 15th. New York push up, boom, retest. It kind of trickled to the lows here. Deep grab, but still respecting that zone. So I would say it would be interesting to see how GJ continues to respect this area here. Because now we're looking at this like some kind of a liquidity grab, right? Objectively speaking, this is what a liquidity grab looked like. Strong wick, then push back up. Correct? And we can also see that we got a level right here too. So the way GJ is set up on the 1 hour is looking really, really freaking good. If you start to see candles pop back above like 217, 218, because we're at a like key level. Again, this is also a level of confluence. Because we're like break, retested, liquidity grab. Maybe only if we start to break back below it here. Then let me actually move that zone. Then we could get like a wick fill. Essentially like it will just be a wick fill of this area here. But this is also rejection. Correct? Because this move came down to fill this range. Once it started to break. Yeah, remember this is an hourly time frame. Once that break here, the whole idea of this was so price can come to fill this range. So you see you had clean traffic down towards the support. 217 when this candle broke below it, right? It came, it did it. It filled more than 60%. Profit taking, release. Now it looks like sellers are still somewhat in the market. But they need to get below this level. Right here. So that's why I would say like sells. You got sells below hourly support. And you got buys above hourly resistance. So you're going to refine it a bit more in the 15. 15 looks like it's about to break out. Here for like an early entry on GJ. So you might see something similar like this. Because it's not like that accumulation. It's in a setup phase. Look at the orders flying in on gold. Gold should be moving right now. Look at the amount of orders in there. So with GJ, I would be expecting at least some of this range here to get filled. Because now that wick, that rejection is clean candle bodies down towards like 217. So that's what I'll be kind of expecting. With a New York session here as well. So now you're getting like NY volume here. And if NY is starting to push down, then probably gonna keep pushing down. There, you see that profit taking phase, boom, now price coming back in here. I would personally wait for the new hourly open because there's still a lot of buyer aggression on this hourly here, which is a doji. It's a doji at this moment. It just flipped bearish. So I would wait. I would wait for the new hourly open because now that could give us a hint. Remember, like what I said, it's just similar thing like what happened yesterday too. Look at what happened here. Boom, we took a buy, right? It hit profit taking mark, came down. Yesterday was similar situation. You see what happened yesterday? We also took a buy here. And you see it's like pretty much the same pattern. We took a buy here, it hit that level, and then it came down, correct? It literally got the same pattern right there. That's why I said this could be like a potential thing to happen here today as well. And then we're gonna see later like a fat sell. But you still want to wait at least 10 more minutes, get the new hourly open there, and then ride that wave with the hourly. But you'll be looking more for like sells. At least the cleanest sells would be coming somewhere below this kind of like support here. This is at 30-minute as well, and hourly. All those line up with that rejection up here. Spiked above, boom, similar thing like yesterday, and just completely nutted. So you want to be looking at, you know, some potential sells here. You got some potential sells below that support. In terms of buying, the daily is up 1%, but it's not really having too much structure on the left-hand side at this point because you see like there's nothing here. It's a lot easier to read it if it did come down, I would say. And it would probably move a lot faster too if it did come down instead of moving up. It'd probably like dump a lot more heavy. Gonna make really good gains on that. But I'm not gonna be trading anymore. I'm already up like 10%. I don't need it. I don't need it. But I can see that being a very, very nice move. But if it doesn't break below 41.10, most likely it's going to come down, create like a little bit of structure here, and then break and play within this range. And then this becomes now your playing field. Your sandbox is going to be right here between that support and then that resistance. And then that whole range is going to be roughly, let's say about like 220 pips. 220 pips. So I think either way, breaks below that low, amazing. You got pretty good sells. Create structure here, moves up. Amazing range. There's enough room to play within this accumulation. Because that accumulation is a lot more different than what this was. That was like 96 pip range. Let's say 100 pips. This whole area is like 250 pips. So you could still play off the higher time frame fluctuations. And taking buys here at the lows and then taking sells here at the highs. If it doesn't break below 41.10. That's what I would say, chat. But I appreciate y'all tuning into the stream. I will see you tomorrow. Take care, everybody. Amazing, amazing session. Let's get it. And let's remain disciplined. Let's continue to follow rules and keep things simple. So adios. Appreciate you guys tuning in. I'll see you in the next one. Peace. Love.